All right, guys. So this will be a classic example of a breakout. Now, these are all one-day candles, and this yellow line is something I drew in myself, and I drew it in on this day after it topped out at the yellow line. So if you look, you can already see multiple points on the chart where it's topping out at the yellow line. And if you look on the 15-minute candle, so now each candle is 15 minutes, this is one day, this is another day. You'll see several points where this yellow line is significant. It tops out right here. It tops out at the yellow line right here, right here. It uses the yellow line as a support, so it bottoms out right there. And then most recently, it tops out at the yellow line right there. So the yellow line is clearly a significant line that it generally cannot get past, and if it does get past, that is significant. So on this day here, at the end of the day, I put in the yellow line, knowing that if it gets past that line, something significant will probably happen. So then today, it tests the line, and then finally breaks out. So we'll look at today closer on the 1-minute candle. So very little volume today, nothing really happening. As you can see here, there's the volume, it all comes in later. There's a push. For what reasons we don't know, there's no news, so it could be just some random stock speculator. Who knows? So it pushes, breaks it a little bit, then comes down, so it didn't succeed. You wouldn't want to buy in right there. And then it comes and it really breaks it. So that's when you want to buy in, when there's actually confirmation. There's several candles above the breakout. And then it comes and it tests, right? And it actually breaks down, but it doesn't get more than a wick below the... And it could just be, you know, there's margin of error. Maybe I drew the line wrong. Maybe it's supposed to be there, right? Or maybe it's supposed to be there. But it's just a rough guide, so, you know. And so anyway, I see this, all this action around here is when I'm notified to this action. So I buy in because even though it's extended quite a bit, I think the reward is still worth the risk. So I buy in, risking the yellow line. So if it comes down to the yellow line and breaks it, that's when I'm going to get out. And then I sell here for completely ulterior reasons. I needed some capital for another stock, so I sold, which was a terrible decision because it ended up giving us a huge, nice spike here. So I'm still kicking myself for that. But yeah, so basically you have to look at the chart from the daily first and then zoom in from the daily. So you look on the chart, see if there's any significant areas, and then you go intradaily and see if those areas really are significant or if there's any other significant areas you've missed. So here we go and we see, yeah, it really is significant. And then sure enough, on today, it proved to be a significant line. And so that's how breakouts work. I hope that was helpful, and I'll see you guys next time.